Yeah, it's another day in the office, bro.
Hey man, let's go ahead and get it started. Hey, y'all, this is not scripted. We going off the cuff. This is something that we do. So I hope y'all get value, which I know you will. I'm not even concerned about that. So make sure you have your pen, your notes ready, and let's get to it.
Perfect. First and foremost, Doc, I want to give it back to you, man, for even inviting me on this session. I heard you lit it up last call. My goal and main objective on this call is just to add extra value to what Doc has already began, guys. He invited me on this call to, be able to shine my light in what it is that I do, and how I mark up charts. I appreciate the disclaimer, bro, because that is something a lot of people get caught in just because I call a trade or something like that. Understand that B or Doc, we don't control the markets anyway. Right. So everything that we're doing is strictly just trade ideas. But we wouldn't give you no sauce that we didn't think was gonna hit anyway. So use these signals and or trade ideas to your own discretion. And really what I really want you guys to take from it is the psychology behind why we mark this thing up. That's very, very important. If we can install our thought process in here on for you, it's not really a trade training, so to speak. You're just getting trained why we trade the way that we do. But I always give it back to, the leaders and also the platform that I've been able to accumulate this information from. I'm just delivering it to y'all in a way that we understand.
Facts.
So shout out to Doc. Always making some power moves, man. That might be one of the most slept on chairmen in the academy. I'm gonna tell you that right now. That man is talented, bro. That call that we had the other this past Thursday, fire, bro. Fire. Still cats hit me up like, hey man, when the next one? When the next one? I'm like, you know what, bro? Just stay tuned.
Stay tuned.
Stay tuned. We coming with some sauce, man.
Yeah,
all right,
Melo
cool. Let's
always in the lab behind the scenes, man. So this never underestimate this guy's work ethic and his heart for you all. So appreciate you, bro.
For sure.
All right, chat should be live too. So if y'all have questions while one of us going over, make sure you put them in. We'll make sure we get them addressed.
Let me see. We got everybody in love with Nas. Interesting. Bitcoin, silver, GR30, Antoine. Which Antoine is this, man? Is this the Antoine I think it is?
Antoine Mitchell, I think. Yep.
Oh, Antoine Mitchell? Okay, bet.
Yeah.
100, man. Your wish is my command, brother.
Hey, bro, it's your screen, and then, we can piggyback, do it, whatever you want to do, man.
Let's dive in. So I'll give people a few pointers on how I approach my week. I'll tell you guys some cool stuff.
Hey, bro, you want to put this on Facebook?
Yeah, you can. Go ahead.
It's up to you. You say, yeah, we do it. You say, no, we don't do
it. Man. Yeah, let's put it on there, bro. Let's give them some sauce.
Okay,
now I can tag people in this stuff, so I ain't got to talk about it. Let me see. I'll wait until you get it on there.
Yeah, I'll let you know when it's up. While we're doing this, for everybody who are tuning in, we appreciate you, man. Appreciate you all. Let's make this one of the best weeks you ever had. Sunday setups. No, I'm not muted. You need me to mute?
Mm-hmm.
You can talk.
Out of my team's 16 eliminations.
We live, bro.
We are live. Okay, welcome everybody to Sunday Markups, man. Trade and chill session with my guy, Doc, the legend, right? Our main goal on this call, guys, is to, be able to not only educate, but, mainly give you guys the confidence as to why we do certain things or have certain, strategies or approaches to how we mark a chart up, and pretty much just get ready for the week. Like I said, disclaimer. What's the disclaimer you said? I like the way you said it.
Hey, man, this is for informational purposes only. You trade at your own risk, just like you know, when an educator, when Melo, when Gilberto, when Kevin, anybody provides you with a trade idea, if you take profit, congratulations to you. If you hit stop loss, that's your responsibility. Just like you don't send checks when you win, don't send blame when you lose. Take the information. If you think it applies to you, if you can get value from it, apply it. If not, don't. But everybody trades at their own risk. Also, this is not to replace the academy. It is so important that you go through the education. You cannot cheat the process, ladies and gentlemen. You cannot cheat the process. The process will always reveal you. The question is, do you want that revelation before you finish or after? Choice is yours.
And with that being stated, ladies and gentlemen, let's dive in. The choice is yours. Nah, man, let's eat. We know what we came here for. We know what we came here for. Y'all know why I'm here. Y'all know why Doc is here.
Yes,
all right, let's get.
Feel free to share it. Go ahead.
Let's get it. All right, guys. Let me go. I'm gonna go ahead and share my screen. Cool. Before we dive into this, guys, the first thing I do is there's a couple resources that you guys can check out, right? One resource is my FX book, and another would be Forex Factory. This gives me a census on when there's going to be momentum and news being released during the week. It's important for me to know because every time I look at a chart, I know I don't have to take a trade because I've already gave myself a sense of awareness on when there's going to be volatile moments in the market. Okay, so Forex Factory and my FX book. Honestly, the distinct difference that I know for a fact is if you're trading futures, commodities like metals, gold, oil, stuff like that. You see those more on my FX book. And they pretty much, I mainly use my FX book, but Forex Factory is another good one as well. Very, very popular. So this is what I do, right? Sundays, we know that the market opens here at 5 o'clock. Everyone in the market, everyone who trades or has some type of awareness on how to be able to trade gaps, we know that the market gaps over the weekend, or it looks like a gap on our data feed, but those are just orders that need to get fulfilled, right? So one thing you guys want to be patient, just because you guys see the gap in the market and you know it has to get filled, it may not get filled until you actually have some awareness on correlation on when that pair is going to have some momentum. So for the pairs that you guys are trading, a lot of the stuff that we trade is influenced by the US dollar, which is also called the dollar index, or DXY for short. Okay, the DXY. You guys want to pay attention to the DXY, or the dollar index, because this influences how a lot of the indice pairs move. Also, obviously, currency pairs as well, right? We're in the United States, so you need to understand what our dollar is doing at this moment right here. You clearly see that price has broken structure and we are on a downtrend, potentially getting ready to have some dollar strength this week. For sure, we should have some dollar strength this week, but be mindful of the market manipulation that could take place because of everything going on with the election. Okay, so let's go to my FX book or we'll rock with Forex Factory. This is a little easier for you guys to read. So we know Sunday, right? NZD, AUD, right? Why are these pairs being, having some type of releases, right? Now, here's a mental note for you guys if you're taking notes, right? Yellow folders. Everything on here is some type of announcement, meeting, or anything relevant in that economy, right? Anything relevant in that economy that's being talked about or anything of that nature. I don't really dive too much into news because I trade pretty much 95% off of technical analysis. I understand what these charts mean, and I understand price action and structure. And then I factor in news to be the catalyst on when I can expect to see price move. Okay. So yellow folders are just regular announcements, right? If you see orange and red folders, right? Red folders are high impact news. You need to write that down. high impact news. What does that mean? High impact means that these are the times that you're going to see these sparks or these spikes in the market. Orange folders. This is where you're going to see not heavy spikes, but there's going to be some type of burst of momentum around these times. So what's hard for a lot of us traders to, especially when you're new, this was something that I struggle with factoring in because no one actually broke down to me what how influential fundamental analysis is when you're making the decision as to your bias as to why you want to buy or sell. So if you only base it off of technicals, then you have to be more patient as to when you take trades, which is why I keep it very, very simple. You should only be buying near previous high or near previous lows, and you should only be selling near previous highs. If you keep that very, very simple, then you can, even if you catch a trade in no man's land, at least you know what target you're trading to. So first things first is you need to understand before you look at a chart, what is going on throughout the week. Now you can plan your trading schedule in correspondence to when volatility is happening on the week for the pairs that you like to trade. A lot of us trade pairs and everything like that based off of how much it pays per pip, but lack of attention to detail was making you guys lose, because a lot of times you guys aren't wrong about the direction, you're wrong about when. You get caught, you get caught into all the fluff and all the the noise because you're not aware of news getting released during those times. Okay, so rule of thumb: if you're not experienced with trading the news, don't trade during the news. Just don't have any trades open during the news. If you have trades open prior to the news being released, make sure that you move your stop losses in profit. Okay. Make sure that you move your stop losses in profit to protect your account. The name of the game in trading, guys, is account preservation. We want to keep capital in our account. We don't want winners to turn into losers. If you lose some of the profit that you lost, you shouldn't have a winner turn into red. Does that make sense? That's just poor trade management. So with that being stated, guys, let's dive in. Monday, right? Sunday is the market gap. So we don't know how it's going to gap until we see it. Okay. That's point number one. Point number two, right? Mondays are normally a day that pretty much sets the date for the week, sets the pretty much pivot points during a week that you can make plays off of. How I trade, guys, is I'm somewhat of a swing trader and position trader. I hold my trades for 2 or 3 days because while I'm building a business, it helps me build my business because I have numbers growing right in front of their face instead of me trying to just show trades that my audience may not know what the hell that means or anything like that. No one cares. People want to know, how did you come up with that stuff, right? So the complexity that you guys have within each of you guys' brain cells as to how you come up with this stuff is not what attracts people to trading. What happens is, what is your plan? What plan do you have in place that's duplicatable for them to walk into that? And then once they adopt that mindset, you just grow from there, right? And get reps in. So Mondays normally set the tempo for the week as to where it is. I typically look to trade either Monday evenings going into London in the morning. And my ideal trade period is around 8:30 in the morning to around 11. That's why I mainly look for entries, because that works for me, right? We do calls in the evenings. We're doing a lot of training in the evenings. So I don't really look to trade in the evenings. Now that I got my eyes on HFX, I'm trading a little more with my team at night. That's out of my comfort zone. So HFX is what's gonna get my time in the evenings. But regular trade, man, y'all know regular MetaTrader 4 or 5, whatever platform you use, that's where the bag is at. I don't really care too much for time-based trading. I care more about trading for percentages and not compounding so quickly. So that's why I'm able to trade, hold my trades for 3 days to a week to a month or whatever, and just scale off my positions as the trade is going in my favor. So what I'm really telling you guys in layman terms is I trade with the trend. And if I counter trend trade, it's because I see a setup, but I'm not marrying, right? I don't marry my trades. I don't hold on to a winner until if it give me 200 and I said I wanted to make 20 pips, right? I don't hold my trades until if the market want to give me more, cool, but I make sure that I secure my 20 pips. I make sure that I secure my 50 to 100 pips because I'm trading off of risk and reward ratios and percentages. When you trade in HFX, you trade based off time and you have a compounding plan. So you should already know how much you're risking, right? Risk management is a little easier on HFX, guys. Not to compare the two, I'm just giving you, the rundown on if that's what you're trading while you're watching this. The psychology is going to be slightly different because when you factor in binaries, you basing it off of how long you hold a trade. So no one's going to ask that when you trade in HFX. How long do I hold a trade? Well, that's that style of trade. You don't ask that. With trading regular, you can scale in and out of your positions or add more positions on based off the equity that you're already compounding, right? So Mondays, setting the tempo of the week. Tuesdays, right? This is when we start getting busy. Wednesdays, Thursdays. And here's another note that you guys want to factor in. Non-farm payroll, right? NFP for short. NFP for short. The first Friday of every new month, right? Every new calendar month is NFP. This is where you have non-farm payrolls, right? Employment changes, unemployment rates, right? This is where it's going out. News is getting released about the job, right? Our economy in relation to jobs and unemployment. Okay.
And Melo, I don't want to cut you off, but this week is going to be very important too because of election day.
Because of election. Yep. It's getting there. Yep. So with all of this stuff going on, guys, don't be a spectator, man. Be somebody that's that's prepared, right? Prepared for what could happen, but don't be naive and only base it off of what the charts is saying. Just really understand what's happening as a whole, and the charts is gonna tell the story, right? The charts really tell the story, but this is what I really want you guys to write down. News is just a catalyst, right? News is the catalyst that gets price to move in a certain direction by a certain amount of time. Banks trade off of quotas, right? So when we're trading for pips, the banks and them not trading for that. They're trading for P&L, profit and loss. Banks don't like going in drawdown. So when you understand charts and technical analysis, you can start to piece things together and say, okay, well, if price does this, right? Or you saw Doc, if you hopped on Doc sessions or you've been trading with him, he understands to have a kind of a neutral like bias as to the market could go here. But if it breaks this and stays above it and retests, then I'm a buy in this area, right? Or if it breaks below this area, this is going to be where I sell. That's a very, very great way to trade because now you become like water. You just flow with what the market give you and you make plays off that, right? Basketball terms, we just take what the defense gives us. But your goal on when it comes to trading is to be on offense. And when you're on offense, you're not necessarily reacting to market conditions. You're just making plays off of if and then scenarios. If price breaks a certain level, then we look to buy and and now you need to know where you're holding your trade to. Will it get there? Your job is not to know if it's going to get there. Your job is to be right about the direction and the risk that you have involved, right, on that trade. That as it's getting there, it doesn't matter how long it takes because you understand how many pips that distance is from where you entered the trade. When you understand how many pips that distance is from the area or price you want to enter, then you can reverse engineer what lot size you want to use, how much you want to risk. Again, risk to reward. So hopefully all that makes sense so far, guys, but you can see where these red folders are, right? Monday, 10 o'clock a.m., right? For anybody that's trading NAS, right? Or the S&P, right? Or SPX. That's what it's called when you're trading on MetaTrader and stuff like that. The news gets released for them at 9 o'clock, okay? In between the hours of 9 and 10. News for NAS specifically, NAS 100, that gets released at 9:30 a.m. Monday through Friday. That's something you want to know. Because if you're entering trades around then, you probably shouldn't enter trades before it, unless you're skilled. The more confident and skilled that you are, maybe you can trade news. But I highly don't recommend it. Why don't you just wait until the manipulation happens and then make the play off of that? Because whatever goes up real fast, right? If it moves fast, it won't last. Write that down. If it moves fast, it won't last.
I think I dropped that on them last week.
Yeah, seriously. If it move fast, it won't last. So how I trade, guys, is I base everything off of time of day, and just market conditions, right? You guys know that the market is going to move in waves, or it's going to move up and down. Your ability to be able to trade off of weekly, daily, and 4-hour charts is going to give you the overall picture about what's happening. I enter off of, 1 minute, 5-minute charts, but I'm already working with a range of price before I even go down to those lower time frames to see details. Okay. Some people call it naked trading because I trade price action, market structure. I use fibs to give me confluence as to where liquidity is at and where structure is at, because those fib ratios automatically factor in. They're going to be the same no matter where I draw. The key is to understand certain rules and techniques on how to use it, and then understand also, both sides of the spectrum, because there's always a buy side and a sell side in the markets. While you're buying, somebody else is selling. And if you're on the wrong side of that trade, either which way you decide to go, you need to understand just simple principles that I tell everyone, right? Just buy at previous lows and sell at previous highs, right? The question is, what else do you need to see, right? What else do you need to see in order to make those decisions? And I'm gonna go over that here today when we mark up these charts. Let's see.
While you're doing that, somebody asked about Nas. The U.S. stock markets, SPX, NAS, US 30, they open generally. That ringing bell is 9:30 a.m. Eastern Standard Time.
I'm gonna just close out all these windows, bro. Sometime when I share my screen, my computer.
Zoom takes a lot of resources, especially when there's multiple people.
Right. So I want
to. Cliff, London time, I believe, and Melo, you can correct me if I'm wrong. I believe London time is 6 hours ahead.
Yes. All right. I'm gonna share my screen again. Just go here with it. All right, now I can see the chat. Because I was sharing the screen specifically on Zoom, it wasn't letting me go to my other window.
Cool.
All right, got you.
Hey, Melo, somebody asked you trade 8:30 a.m. to 11 a.m. Pacific or Eastern?
Eastern. I'm located out here in Charlotte, so trade off Eastern Standard Time.
Yeah, I knew that.
Right.
I didn't want to answer for you though.
Oh, bet. All right, guys, check this out. So this is easy structure right here, right? Easy structure. We know that here over the last few weeks, right? Over the last few weeks, really since we got this big move up, I would say since March earlier this year, obviously it's around the time where the pandemic kind of really began. So we seeing this decline in price, right? In the US dollar. The US dollar is taking a hit. And now with this election and everything, now price has to, the election and everything is pretty much set up as one of the catalysts to get price to help recover. Again, the charts tell their own story, but the news is the catalyst that gives price permission to do what you already know it's going to do. Right? So since March of earlier this year, price has clearly been on a downtrend. So what we're looking for is some recovery, because there are spaces in here, guys, right, which we call somewhat imbalance, right? Imbalance is, right, where you start seeing support and resistance. Like, let's just say right here, right? Let's just say right here. When price breaks below an area, but there's no retest to that liquidity zone, this space In between that is what's called imbalance. Okay. Now there's about three different definitions of imbalance, but I'm just keeping it in layman terms. I don't want to get into much detail about that. I just want to share with you guys that when you see price break below a big move with no retest, there are what's called pools of liquidity in these areas, right? Liquidity in these areas, or in what we would call, when we talking in terms of structure, right? Lower highs and lower lows. So what you guys see happening here is clearly a downtrend. Lower high, right? And price comes here and hold on. Price comes here and creates another lower high. But in this detail, if I'm thinking about wanting to sell, guys, I only want to sell near either previous highs, like equal highs, or I want to sell at a lower high. Now, understand exactly what I mean by that. If I know that in this red zone right here, price has never came back and retested, right? We know to break and retest. We had no retested here. So after price created this lower high in a heavy downtrend, price creates lower lows. So my first clue that price is getting ready to start shifting up is one, price came back and retested a previous low, which would be, let me change the zone, which would be down here. Keep in mind, we're talking about the dollar. If we talking about the dollar index, that means that anything associated with the dollar is also going to be influenced with upward momentum. So if I believe that my bias for the week is that price is going to give me some upward momentum throughout the week, then now I'm timing up on Forex Factory or my FX book. When are those days when news gets released to be able to push price up anyway? Now you can start getting a feel for when there's going to be momentum that push your bias in the direction that you already expected. So when I see this lower high right here, right, even though price is still heavily in a downtrend, it always leaves clues for you, right? It always leaves clues. So the first clue that I have is, what direction is the market going right now? It's going down right now, right? Overall, on the daily, it's a downtrend. But understand, the higher the time frame, the truer the picture. So if my higher time frames is telling me that this is a current downtrend, yes, we still currently in a downtrend. But when you go down to each day, right? Because now I'm looking at overall structure. When I go into what the days look like on a daily calendar, on a daily chart, each one of these candles represent a day. I hope you guys are following that. Each one of these candles represent one day. Write this down, family. Each daily candle forms, right? The market is open 24 hours a day, but it has market breaks to when a new daily candle is established. A new daily candle is established every day after, 5 o'clock. So 6 o'clock Eastern Standard Time. Okay. 6 o'clock Eastern Standard Time, you'll start to see a new daily candle start to form. So this candle right here specifically, right, was October 30th, which was Friday. This is how this candle closed, right? This was Thursday. This candle was Wednesday. This candle was Tuesday. This was Monday. That was our trading week. If I go to the weekly, you should see a bullish candle. Now watch how simple I share this with you guys. How do I know that there is going to be some more upward momentum throughout the week? I'm going to remove this box because we want to see details. For one, we see wicks down here showing exhaustion. I'm going to share a bar with you guys. This is just understanding price action. If you guys haven't read the Candlestick Bible, or you at least dabbled into trying to understand it, you need to understand candlesticks, especially if you basing the majority of your analysis off of candles and technical analysis. You need to understand what these candles mean. I'm gonna tell them to you in our language. Whenever I see wicks, wicks means rejection. Let's write it down, right? Wicks equals rejection. Or exhaustion. Let's bring that down to a 20. All right, cool. Whenever I see wicks or exhaustion, this is how I'm mentally processing it. For one, at a true rejection, guys, there's always, in most cases, there's going to be a bearish exhaustion before you start seeing bullish momentum for when price starts to shift up. If you see this, if you see a bullish exhaustion before price shifting up, price is always going to come back and retest this area. Please, right? People not going to tell y'all this. I'm just going to be real. Most people not going to tell y'all this stuff. Here, let's make it in a, cool. We'll make black and then we'll do blue. This is how I know price is getting ready to start reversing near these areas. When I see something like this, right? And we'll just give them some wicks. We'll make this one red, or we'll make it blue. All right. Cool. If I see a bearish candle, right? If I see a bearish candle exhausting near a previous level of support, right? I know one or two things is going to happen. One, if I'm basing this off of a daily or a weekly, the first thing I'm doing, if I'm looking to buy, the first thing I'm doing, guys, is I'm marking off the low that it made, right? The close, where that candle closed at during the week. You guys know that anatomy of a candle is on a bearish candle. Price is open at the top of the body of the candle, right? And then close at the bottom of the body of the candle. Wicks or shadows or whatever, however you want to call them, just understand that if a wick was there, that means price went there, right? And the wicks on a higher time frame are still candles on a lower time frame. I just want y'all to know that. So if I see exhaustion on a higher time frame, I know that that's true exhaustion. If I see wicks on a 1 minute and 5 minute, y'all trade on those time frames. That's why you lose money so much. Because 1 hour support is not true 1 hour support unless it's at a 4 hour support where you're seeing that rejection on a 1 minute. Right? 4 hour daily. So if I'm going off of daily closes, I know I can hold my trade for multiple days because I understand as price. Hold on, delete that. All right, let's delete this real quick. When I see a bearish candle, rejection, okay, if I'm looking for that next day, depending on how long the wick is, I'm gonna know if that's true exhaustion. A small wick is not true exhaustion. I won't give you exact parameters and stuff. It's just based off of feel and sentiment. And I got experience, so I know what I'm looking at, right? When I mark off these principles, just take it off the principles that I'm telling y'all. When I mark off the low of the previous day and the lowest low that it went, I know that as I hover over these candles, when you guys look up here in this area, OHLC, very, very important when you're making your decision. Because when I hover over this bearish candle, the open of this candle, which was here at the top, right? The top of the body of the candle. The high of that candle or the open of that candle was 93.199. The high of that candle was 93.364. So when I'm looking at any chart, I'm looking at how many pips was the high away from the open, right? In that range, guys, that's where I'm gonna be looking to sell, somewhere in that space, if price fails to break above it. If I'm looking to buy, I'm looking at the low, right? The low and the close of the previous day. And I'm asking myself, okay, if I'm basing it off of this bearish candle that my mouse is hovered over, the low of that candle is at 92,198. right? 92, 198. And the weekly low or the close of that candle was 92, 301. So what I'm saying is if I know those ranges in between there, I know that that's where the liquidity is at. Price respects previous lows and previous highs. When you start factoring in structure and rules as far as break of structure, now you can get a feel for what areas or what the market is giving you clues that it's getting ready to do, but you don't have to know when you know where. News tells you when, right? News gives you a feel on when price is going to give you some momentum. A lot of you guys are trading, GBP, USD at 9 o'clock p.m. and wondering why the market is moving so slow. Well, you trading the US dollar against the US dollar when there's no news being released at 9 p.m. And you trading way pre-London. You know what I'm saying? London opens at 3 o'clock a.m. Eastern Standard Time. So you may be entering too early. You may be right about the direction, but the times that you enter in, you want to see price go into momentum when you enter those trades, especially if you're doing market execution, right? I do a lot of buy limits and sell limits because I just understand, again, market like conditions. And also I understand just the rules that I'm telling y'all right now. So if I'm looking at a low and I'm looking to buy the next day, what I need to see happen is, let's just use this line for instance before I dive into marking up these charts. Because when I start marking them up, then y'all gonna understand this stuff makes sense and we're gonna make a lot of money this week. When price breaks below in this zone, in this range, I know that even if I go to a lower time frame, all I'm gonna see is candles. But these lines that y'all putting on y'all chart, y'all don't know why y'all putting them there. Y'all putting lines on your chart to be able to identify support and resistance, but don't really understand the rules behind it. Your line on your chart didn't mean nothing. That was to help you identify something, whatever you was thinking. But your lines don't exist on here. You got to transform your mind into how a banker would trade. My goal is to let a few people win so they can put more buy orders in because they don't understand the stuff I'm telling you right now. They didn't go through the academy. They didn't go through the boot camps that everybody has access to. They didn't go through the information. So they let a lot of people win some to be able to tell everybody through the signals, buy this, sell this. But in reality, since everybody's trading on probably not even the same broker, price is not the same across every single broker. There's something that's called slippage. So if I tell you I could be my take profit could be 3 to 5 pips, above yours or below yours. So on my broker, if I'm using Hugo's Way, if I'm using, whatever broker you guys want to use, right? That same price is not going to hit or take profits at the same time. So you guys got to create rules of risk management for yourself. The person that's calling the signal don't always tell you what broker they're using. So you got to be smart. It's too much gray area. So where trading is very, very subjective. Your goal is to create rules that make your trading objective for you. The signals give you some parameters or a feel of direction, but you determine how much money you want to make per pip on those trades. You determine if you want to hold the trade for how many pips they're going for. But what if that was what the academy was designed to help you do? That's leverage, right? The academy, the groups, all the groups that you're in, they're giving you setups, but you're supposed to put in the time to develop your craft to create the approach that makes sense for you and your goals and how you want to grow your money, right? So when I see price getting into a low, I'm saying, okay, I'm making scenarios. What you seen Doc do on a lower time frame, I do on a higher time frame because I understand if price closed at a certain level on a weekly, I know that for the rest of the week, it's probably about to start trading into the previous week. Is this stuff making sense so far, y'all? If it failed to break below it, I know it's probably about to start trading in that week. So no matter if you trade with the trend or you counter trend trading, you understand what you're getting out of those trades because you understand why you trade that way.
Hey, bro, let me allow Joshua to ask this question.
What's up?
Go ahead, Josh.
The Alvarez brothers, what's good?
How you doing?
What's up, brother?
Sorry, what was the question? My mom's at home. She just got done with surgery, so I was trying to listen to her and listen to y'all.
You had your hand raised, bro. So what's your question?
Oh, did I? My bad. I didn't mean to.
Okay, cool.
All right, the class continues, Josh. Thank you. All right, cool. All right, look, check this out. When price starts trading below or trading into a weekly or daily like zone, or you can call it, yeah, just call it a zone, right? I'm gonna know that if price fails to break below this previous low, right? Because I want to enter where I see this bottom wick, I want to enter near there, but I also see where the bodies of the candles close. So anything close to these areas is where I want to buy at if I'm looking to counter trend. If I'm looking to buy this retest, everybody sees the move, but they don't know what they expect. Price moves in cycles, guys. It's going to do an uptrend, or it's going to go in something that's called mark up. Right here, I'm gonna just bring it up to y'all, so y'all, because we visual creatures. Let's do Google, and let's do Forex market cycles. Let's get a good image. Blah, 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 blah. I'm really looking for, we might be able to work off this one, Doc. Cool. Might be able to work off this. Market phases, right? Price comes. Let's see if they can. All right, that's no good either. All right, let's just go off this image. Guys, when price is in an uptrend, we call it a highs and lows, but we know that price just don't move smoothly like that, which is why you got to be able to recognize swing highs and swing lows. That's true structure. When you get near those lows, you're going to see these type of movements. These are where you start seeing wedges, right? You start seeing triangles, flag patterns, stuff like that, which we call consolidation, but you can make money in consolidated markets. Just don't trade in 5-minute or 15-minute consolidation ranges, because that's a tighter range. What looked like consolidation on a higher time frame was still highs and lows that you could have made good money in between, just from recognizing what part of the cycle that you in. So when prices go into markups, you see that on this pattern right here on this chart, it says you're going to see at previous lows, you're going to see like these W patterns. I always tell guys, man, you can buy and sell at W's, because price is always going to give you a variation of when it's a good time to buy or sell in the markets. Let's go back to D. Let's go back to the chart. So when I see price start trading in here, just imagine this line or candles. And I know that these two red lines was the low of the previous week and the lowest low that it made the previous week. I know that anything in this zone in between these red lines, I'm going to see candles in between them on the lower time frame. When I see price do something like this, right? I may buy this depending on the date, the time of the date it is. If I see price come down and do this, not this, right? Because if you still trading with the trend, you would know that if you using this line, the low of the previous week and the lowest low of the previous week, that the low right here was a lower high on a lower time frame, and this was a lower low. I'm gonna say it again. The close of the body of the bearish candle was a lower high. This was a lower low. If I don't see price break above or break back above the new day, or the new, like break above on the next candle, right, of the previous low, then price is still in a downtrend. You have to know that, right? You have to know that. That's just common sense at this point, right? A break of structure is in a downtrend, guys. Price does not want to create, right? Price does not want to create highs that get broken. So in a downtrend, we won't further lows. We want to push the market lower. When price fails to create a lower low, your first target should be, this is a scalping strategy. Your first target can be the previous lower high that it made. Now, preferably off which time frames you want to base this off of. If you trade intraday, depending on your bread, your capital, how much money you got in there, you should be trading to the previous lower high, probably at a 1 hour, just to keep it safe. I think your anxiety can handle a 1 hour time frame. Your patience, your experience can handle a 1 hour time frame. So even if you trade an hour by hour basis, you can trade with these principles that I'm giving you. They work on every time frame, but they work more legitimate off of higher time frame analysis. Right? So when price starts getting near this previous high, let's say you entered near a previous low. You saw that price failed to break below this low. So you like, okay, I'm about to buy in here. Where are you buying to? Okay, you're buying to here, but what if price does this? Creates a lower high. Rule number one, you should probably look to closing that trade out and just respect your pips that you got. It's not ready yet. Right? Because what end up happening, guys, a winner will turn into a loser because y'all buy right here and y'all see prices already going momentum and due to poor money management and greed and just reckless, just careless type of trading, bro. You push your money back into the markets, you give it all back, and price just keeps doing this. Right? If you bought near a previous low, then yeah, that's the biggest discount that you can buy it because you saw price already react at that level. When price doesn't create a higher high, close that counter trend trade out, and you should be hopping in a sell to ride that joint back down. And you guys got to stop marrying y'all bias. Just because you want to buy it, don't mean it's gonna buy to where you think it is. If you counter trend trading, understand, I say always trade to this because price, again, if I'm a buyer, I'm counter trend trading in a downtrend. If I'm a seller, seller's been kicking the buyer's tail. So why would I trade against the trend? Why would I hold that and marry that trade when I know the more profitable trade long term is just trade with the trend? So if you guys want to know how I turned 1,000 to 50 grand, it's because I was aggressive with my principles because I knew what price was doing. So I bought on the front end. I counter trend traded because that was just the market conditions at that time that I entered them trades. And then I sold, I lotted up, right? Now, mind you, I'm in profit, 5 grand the next day. So now, even though I have 1,000 in my trading account, I'm up 5,000 in floating profit, which means that since our brokers give us leverage, they allow us to leverage what we would close out in equity. Is that making sense so far, family? I hope it is. Even though you got 1,000 in your balance, you really got 6,000 in buying power, right? You got really 6,000 in buying power. So don't get caught into, oh, he turned, $50 into 1,000. No. Okay. He made that off of making plays because none of that money is yours until you close that trade out anyway. None of that money is yours until you close the trade out anyway. So when I'm trading with structure, family, it's very, very easy for me to recognize what price is really doing based off of the daily and weekly chart. When I see this little W pattern in those ranges of weekly lows and daily lows, I'm buying in those areas. You guys heard this term before. No retest, no trade. Y'all heard that before. But what you guys look for, what y'all train y'all eyes to only look for, y'all look for a pattern versus just meshing up price and time. I'm able to see the pattern myself or using a scanner or anything. The scanner already do the heavy lifting for you. You just got to apply your rules to the scanner. And then it becomes 88, 95% accurate. It's not 95% accurate just from it printing it out for you. I know it's 100% accurate with the things that it's set up for you because that's what it's designed to do. You don't, your rules is what improves that accuracy. Okay.
Let me get a question in, Melo, from Andrea. Andrea.
Can you hear me?
Yep.
Okay, I got a question in regards to analyzing the trend. So when you're analyzing the trend and you're saying, okay, so you're going in on the higher high and the lower lows of the sell at the wick, at that long wick, do you analyze it from the point of just a 4 hour day, or do you go back a week to see how it went the week before?
I always start off on a week. We at the beginning of the week. That's a great question. We at the beginning of the week. The market opens at around 5 o'clock our time, right? So, or Eastern Standard Time. I'm not sure where you located, but when I see a weekly, like let's just use this for instance right now. This is a live market, right? To answer your question directly, I know that the top of a wick was where a lower high was. Every top of the wick in a downtrend is a lower high. Oh man, I'm giving y'all gas right now. That nugget alone to help you realize if you're in a downtrend. So if I'm looking to sell, I'm only gonna see it sell near the high of the previous day or the high of the previous week. The higher the time frame you enter off of in those areas, the longer you can hold the trade. You follow what I'm saying? Oh, maybe she's not on here anymore.
Yeah,
I got you. So if you seeing these, I do my analysis off of the higher time frame, and once I identify my areas or my kill zones that I want to enter in, then I go to the lower time frame to set up. I talk to myself on the charts. I'll start doing little bubbles, call little things and stuff like that. I'll set a notification on TradingView to let me know when price get there. That way I can go enjoy my day, and I'm waiting on price to come to where I want to trade.
Alerts are underrated.
People don't talk about it. Something so simple, right? No one wants to sit here and watch the chart. This is why we tell you don't have to sit here and watch the charts, right?
Every session I tell people to use alerts so you don't have to babysit.
Yeah, you use the alerts. I just use the alerts, man. When price breaks below a certain level, I tell TradingView to notify me. Now, for all my people that's being cheap and got the free version, you probably only going to be allowed one variation of an alert. So it's going to force you to have to spend some money because you want to make a lot of money. Gone are those days, guys, where we think we can make a lot of money from not doing nothing or investing in anything. We got to get out that mindset.
Right.
Pay the little $14 to $20 a month for something that's going to help you make money. Now you become an investor, a very efficient investor, because now you program certain things into your TradingView. Keynote, please download, if you haven't already, the TradingView app on your phone. Yo, ain't nobody carrying a laptop with them everywhere like a beatbox or something like that. Nobody's doing that no more. So download the TradingView app on your phone, create you a login, right? Log in with that same login on your phone. Any markups you do on your computer is going to show up on your phone. That's one. Two, any notifications you set up on your computer is going to happen on your phone. It's a cloud app. You can't do that on MetaTrader. You can set alerts on MetaTrader. I'm not going into how to do that. You can Google that, YouTube that, how to set alerts on MetaTrader, but it's far more complex, right? So you got to try to shorten the gap between how you respond to certain things, man. The more aware you are, the less anxiety you have, long story short. So let me go ahead and get into it. So I'm just breaking down this. So when I mark up my charts, y'all see why I do it that way. I'm just going into detail now because it only take me 3 to 5 minutes to mark up a chart. It shouldn't take y'all that much time. And it did in the beginning, guys. I was studying 6 to 8 hours a day, bro, to be able to compress time. But if you got a job and stuff, you got to be realistic. You don't have the time. That's why the academy was appealing to you, because they're going to teach you.
Repeat that again, bro. That line. I don't think a lot of people caught that when you mentioned compressing time. Say that part again.
Yeah, man. I was marking them. I put in a lot of studying on the front end so I can compress time on the back end. I didn't want to have to look at stuff that I already know I put in my time and my schedule to study, right? Your study time is for your development. That has nothing to do with building a business. So if I was somebody on the front end where now that I look back at it and I know what I know now, I would have built the business to be able to help me be able to have more time to compress. You might not have that much time to sit there on a chart 8 to 10 hours a day, back testing, not even really knowing what you're looking at. It's a battle versus you. You battling what you trying to apply something that you did that you just learned, and where you messed up was trying to be independent so quickly that you forgot what you was really trading for. You wasn't chasing independence. You was chasing you were chasing sustainable income from this stream that you can scale up over time to not have to go back to work. You make 1,000 in a day and feel like I can quit my job now. No, I was studying. I was working a job when I first found out about this, and because of my approach that I took to it, guys, I demoed for 6 to 8 months. I didn't only demo, but any analysis that I did on my own, I was demoing because I had to trust myself with my own money. I had to trust myself with my own money. I didn't trust myself. I knew I was greedy. So we know that the data feed that you guys are getting on a demo, yes, that's to give you the experience. But you also supposed to get from it the thought process, how you think and how you feel when you're making certain decisions. Why do you guys want to learn that? Why can't you learn the same lesson from losing without feeling the real pain? Right? Why can't you learn the same lesson on a demo without feeling the real pain? You feel the real the what is it called? Euphoria, right? You get this excited feeling. It's like a natural high you get out of being right about something that you don't even really know how you was right. But since you got the result, you wish that 1,000 or 2,000 or 20,000 on demo was real money. So your thoughts from processing that, instead of looking at it like, okay, this is what I thought about, this is what I did, this is why I did it, you just celebrating the fact that you made 10 to 20,000 off of the demo. So now you feel like you're ready. And this is the cycle that a lot of people go in. You don't have any, only time and repetition is what's going to help you breed success. Not let me press this button, see a little bit of profit. I want to make 50 to 100 a day. No, you chase pips, not dollar amounts. Chase pips, not dollar amounts. Right? So with all that being stated, guys, let's just dive into the charts. Let's see what time it is. 3 o'clock. All right, cool. Let's get into it. Check this out. We're gonna scratch this. So my bias, I'm gonna tell y'all right now, my bias is right now for the week is for the dollar to get stronger because of everything building up to the election. This is exactly what I see. I'm bringing on my trusty little fib tool, right? And what I start measuring off rip is I'm seeing the highs and lows. If I don't see at least a 38.2 retracement, it wasn't a real retracement. It was a pullback. Write that down. If I don't see at least a 38.2 retracement, it was not a retracement. It was a pullback. That's a bar for you. Now, what am I measuring? All I want to do is an easy to see move. I want to see an easy to see move. If I measure this, did this go up to 38.2? Yes, it did. Here, I'll put it in here. Here, I'll highlight it for you.
Say you're about to confuse them because you don't have the 38.2 in there.
Yeah, I got you. What else I got on here that they don't need to see? 13. We'll just keep it simple. When I see a 38.2 retracement, guys, what am I talking about? When you're drawing fibs, fibs is literally, it's only designed to help you measure a retracement. I gave y'all 2 rules so far. Only buy at previous lows, sell at previous highs. It may not always get to it's not always going to be identical. So maybe I should say near. Only buy near previous lows, only sell near previous highs. If you leave it that simple, you just increase your profitability by not losing money before the move actually happens. That's one. Number 2, these ain't fib rules. If I see bullish exhaustion, right? And not a bearish exhaustion, this is telling me that all price did was take out, I'm put it this way. Everybody pretty familiar with market orders, right? everybody pretty much familiar with you know, pending orders, buy, stop, sell, stop, whatever. When I see price do something like this, when you see this type of movement right here, right? Price shot up, create a high. People were buying in here, right? But the real liquidity that pushed this market up like that was down here, right? At these two dots. When I see price move up like this and move down, price created a high up here. Just an example, and I'm gonna show y'all this on other charts. Price created a high up here. People are buying at these blue dots because we was taught to buy low. People are selling at the highs. When this happens, all that matters is where were people's stop losses? We were all told to be able to keep 20 to 30 pip stop losses. This is what we were all taught. 20 to 30 pip stop losses. They tell you to place your stop loss 20 to 30 pips below the low. Right? This is what you were taught. I know this is a unanimous rule. I hear it all the time. Because they think that having that wiggle room of stop losses would do it. What if there was ways that you can have a 10 pip stop loss? That means if you got a 10 pip stop loss, you have to have more precision with your entry and less drawdown, but you can risk more on the front end because you know that that's true exhaustion. You can't have a 10 pip stop loss when you enter off the 1 minute because all it's showing you is 10 to 25 pip ranges on a 1 minute. Especially if you trade regular US dollar pairs. You like NAS and SPX and US 30 because it calculates more per pip. But your rules is not leaving you profitable. You don't have no risk management rules. You still to this day, people keep telling you to create a trading plan, family, and you guys still don't do it. So if you don't trade your plan is going to outtrade you. Your plan is going to make you lose. You not having a plan is going to make you lose your money. Right. If you know you want to trade with 10 to 20 pip stop losses, then you need to trade the way that I'm telling you, because the tighter the stop loss, your stop loss ultimately dictates what lot size you use. I don't know if somebody told y'all that, but it's the truth.
I put it on 2 sessions ago, how to calculate stop losses.
Your stop loss dictates what lot size you guys use, right? Your stop loss is that buffer, that wiggle room that you give in the market to do. But if you enter in their previous highs and lows, you can have a tighter stop loss because banks don't like going in drawdown. That's what I'm telling you. So if you can recognize these areas that I'm telling you, and you're patient enough to wait for this to happen, because this is what happens, guys. Y'all place y'all stop loss. Y'all place y'all stop loss 20, 30 pips. And then this is what happens to price. Price will do this, you will be in profit. You don't put no stop loss in profit because you're being stubborn and you're being greedy and you're just trying to brag about the profits that you ain't secure yet. Cool. I've been there, done that. Price is going to come down, hit your stop loss slightly, and then go back up. This is what happens to everybody. Hit your stop loss and then start going back up. It's like, dang, man, they see my stop loss. Well, no, duh. We retail traders. That's the game. That's the game. You got to start learning how to trade like the banks. So with all that being stated, let's go ahead and mark up. Let me show you what I'm talking about. Dollar index. When I brought out my fib, I seen this low to this high. So I know that the first unit that I'm measuring is this move right here. From this high to this low. When you're dragging a fib and you're measuring the downtrend, you're measuring the downtrend, right? So what I mean is when you draw a fib from high to low, you're measuring the retracement back up, right? You're measuring the retracement back up. When I seen price hit a 38.2, okay, cool. Right? Cool. Price hits a 38.2, and then we drop down. Right? We drop down. Here in these areas, guys, this on a weekly is a lower high. Yes, I know that. What I also see is, again, what I was telling you guys, when I see a bullish exhaustion, I I know that price still has a potential to go lower. Why? Because it wasn't bearish exhaustion. Wherever you see bearish exhaustion, price is going to continue to move up. I'll give you an example. This is perfect right here. Look. Y'all see this? This bearish exhaustion was the lowest point that it made. Where price go? Took off. When you see bullish exhaustion at a swing, it's going to eventually like break below that jump. Just gonna let you know that right now. So with all that being stated,
bro, before you move on, repeat that part. I think it's important they need to know the difference between bearish exhaustion and bullish exhaustion at a low.
yeah, man, when you see a bearish candle, when you see a seller candle as support, when you see a candle, a bearish candle as support, right? That's clue number one, that okay, this candle closed here. That means that there are a whole bunch of buyer orders here. That's the only reason why you see a rejection there. That means that there's liquidity down here, right? Where there's liquidity, price don't want to go and draw down. So wherever you see the same techniques that you guys learned about break and retest, where this candle closed at, here, let me zoom in. Where this candle closed at, right? Where this candle closed, and this is the low. Where this candle closed at, if these on a weekly is where the candle closed at, then the next opening will either trade into this liquidity down here, but on a lower time frame, all you'll see is this. On a lower time frame, you see this, a break and retest. That's all you see. Previous resistance becomes future support. So if I'm looking to buy a trade, right? If I bought right here, price created a low, broke above a previous lower high, and came back and retested it. That's break and retest. And I'm only showing y'all this, not even going down to 4 hour, 1 hour, 15 minute, 5 minute. If I know where exhaustion is at on a weekly and daily, then I know what range I'm working within. And if price fails to close below or above it, that's going to be my bias for the next day. And I'll leave it that simple. All right, cool. What's some of the pairs that they wanted to mark up? NAS,
SPX. We do those first, and then I saw GJ, a UJ.
Cool. So NAS, look at what's happening. Look at what's happening, y'all. We got NAS. I'm on NAS on the weekly. So this is exactly what's happening. Cool. Do we see on a weekly swing, we see a high way up here. Hold on, let me drag this drink off. We see a high way up here. Then we see price create a higher low. Right? Price creates a higher low down here. What ends up happening to a lot of us, family, is we'll see this low, but we see bearish exhaustion, or excuse me, bullish exhaustion right here before price went up. So we know eventually price is still going to end up coming down, bringing some more down pressure. I'm giving y'all, this is valuable. This is so valuable to y'all, man. Because when you see this, guys, look at what happens. On the weekly, we just saw wicks. On the daily, we see that the infamous little W pattern that I keep telling y'all gonna see. This is a low, lower high, price created an equal low, damn near equal. It failed to break below this. So I know that when price failed to break below this swing, I would have been buying into the previous day.
Yep.
Where was my previous target though? It would have been here. Now it would have took 1, 2, right? 3, 2.5 days to get there, but I didn't need 2.5 days to go on a profit. I only needed 5 to 10 minutes.
Facts.
Once price get there, I move my stop loss and profit, and I let the price trade to where it's gonna go. I let the market do what it do. Then you gotta break above this previous lower high, and then what do we see? Above this lower high, what do we see? The infamous break and what? Retest. Come on, family. And then price trends up again. So you guys see that once price broke above this structure, this lower high, this focal point, it became support again. It broke above a previous resistance, became support. But this happened on a daily. So I know that if price comes here, if price comes into this zone again, if price fails to break below this previous day, I'm buying because I know that this was a retest on a daily. Very, very simple stuff. So check this out. This ends up happening. Price came up here. The same thing I'm telling y'all at support is the same thing at resistance. If I need to see a bearish candle exhaust on the higher time frames for me to know that I'm gonna start uptrending, then I need to see a bullish candle close at resistance. I need to see bullish exhaustion for me to know that I'm about to sell. It's always a buy side and a sell side. When I see price come here, where's our liquidity at? If I see this big down move, I'm like, oh, the last bearish candle before this big down move, before price shifted down, this is where all the liquidity is at. All your sell orders is in here, right? All your sell orders is in here. So what I start measuring is, okay, where was, before price shifted down, where was the low of that bearish candle? Okay, cool. We know that, bullish. What was the low of that previous bullish candle before price just broke below it? So at resistance, I'm looking for a bullish exhaustion near those lower highs. And then what I do off the higher time frame, guys, I start measuring the low that bullish candle made. I start measuring the opening. I start measuring the hold on, delete, wrong tool. I start measuring the opening of that candle, and I know that in this liquidity zone, prices don't eat into here. I'm looking to sell. Now, why am I looking to sell? Because I know that the election is going on, and I understand price action. So I know that price has to come eat up some of this liquidity down here. We got equal lows. So I know price is about to come test these, right? Price is getting ready to come test these. If price failed to create a higher high, then now we're about to start taking out these lows. So guys, where's another low at? Where's a low? If I'm looking for structure, if I'm looking for a previous pivot point in the market, where are those lows at? Where's that next low at? Right here. This guy, where the bearish exhaustion was. This is where this double bottom placed their stop losses. When I get into my fib, this is the fib training that I was going to get into, but we just ran out of time. With Doc. Doc, I think I showed you. This is the one I showed you about the 1.1, 1.2, stuff like that.
Yep.
Okay, cool. What I start measuring, guys, is okay. At this low right here, price ended up creating, let's just say, a high right here. Cool. I know that with these fibs, guys, I'm going to show y'all a magic trick. I know where everybody's placing their stop loss. Right? Hold on. I take that back. Let me get that. We're going to put -1. Right? And let me see. Did I put a -1.2? I did not. Hold on. See if this joint showing this joint on my fibs. Okay, cool. There we go. Oh, there you go. I was right the first time. So we don't need the negatives. This is where you guys are placing your stop losses. So on NAS, when I'm trading NAS, I understand that there's going to be a whole bunch of up and down movement. I know that so far we recap in the downtrend, you're going to see at the top of these wicks, these are lower highs. So if those don't get broken, you're still in the downtrend. Just keep it that simple. Just keep it that simple, please. If you don't break above these previous wicks at the top of the candle, then you're still in the downtrend. If you don't break below these wicks at the bottom, you're still in the uptrend. Leave it that simple. All right. When I see price eat into this area right here, I know that we had to take some stop losses out. We had to take out somebody's stop loss in order for me to go up. So the same way that you guys see, the same way that y'all see, here, let me scratch this. Watch this. The same way that y'all see these pair of lows right here, watch this. I'm going to measure it from this wick to here. I'll drag it up to this high right here. Now keep in mind, I know that we're gonna see some more uptrend, right? So at least a retest of this previous high up here, because we see bearish exhaustion before price shifted down. Price always has to come back to an equilibrium. So look what ended up happening. In this area right here, this was a double bottom. I'll prove it to y'all. Whenever I see these double bottoms and I see a shift in the market, I know that these areas is getting ready to get taken out. Let's go to 4 hour. There you go right there. I know somebody like, damn, how you know that? A lot of chart time, y'all. Low right here, and then price shifted up. Cool. These pair of lows, right? What did price do? Because people that were buying right here at this one, they stop losses was at 1.1 and 1.2. What y'all see end up happening right here? Look at this. So I told y'all, the dollar is what, you know, I'm telling y'all dollar strength. So really what I'm telling y'all is buy NAS and SPX and stuff this week. That's really what I'm telling y'all, right? If y'all want hey, Doc, you give them the parameters and stuff when you do these type of setups?
Yeah, when I don't really do stop losses because the way I calculate stop losses is different and I'm real tight.
Me too. I got you.
Yeah, you know, when I learned that fib stuff, when most people put stop losses, that's my entries.
Yeah, sniper way. The sniper way.
So
okay, cool.
I'll take a 5-10 pip stop loss on a SPX.
Cool. So guys, look, check this out. We still in the downtrend right now, but depending on how the market opens up, I'm pretty much guaranteeing you that the market is probably going to end up breaking to the upside, just because that's what it would have did if the markets kept going this past week. You're going to get a retest, guys. Very, very simple. I'll go to the 1 hour time frame. Now, when I start looking into this stuff right here, I'm looking at whole numbers, right? So my whole number range in this case is going to be, for NAS, is going to be 1100, right? My whole number there is going to be 1100, right? And it's going to be here. Let's do 112. This I'm gonna bless y'all, man. Watch this. This is how I break down every chart. It's way easier to just do it than explain it, but I know y'all came here to learn too, instead of just watch us mark up. I'm gonna measure my whole numbers. So right now I'm working within the range of 110, right? Or basically, yeah, 110, right? You got 111 where price is at right now, and 112. In between each of these guys is 100 pips. This is the juice. This is the juice. So check this out. Keep factoring in structure, right? Keep factoring in structure, because in this same little area that I just drew in this circle, what y'all see right here? If you see two wicks next to each other, let's make that blue so they can see it. Dark blue, maybe. Cool. Hopefully y'all can see that. In this same area, when I go down to a lower time frame, y'all gonna see a double bottom. Triple bottoms. So this is what I'm telling myself. If price closes above a whole number, I'm buying it to the next 100. Ugh. They might not caught that, Doc. They might not have caught that. I'm gonna say it again. I'm going to say it again. So this how he be doing it. Yes, this is how I do it. This is how I do it. I keep it simple. I know that in between these ranges, family, is 100 points. Them 0.01s, if you do it right, can potentially get you a down payment on a Lambo. Might not get it, might not cash it out on a 0.01. But you don't need a lot of, because of these brokers allow us a lot of leverage, you don't need a big lot size all the time, man. Don't get fooled by that. Don't get fooled by that. I want to trade what's profitable and what's probable. I'm not trying to beat the markets like a video game.
Give them your suggestion, because everybody want to hop in the indices and they only have $50. Give them your suggestion.
Nah, you ain't ready for that. Your account ain't ready for that. You need you need at least 200 to 500. 500 if you trade NAS on a 0.01.
Exactly.
If you trade in or excuse me, at US 30 for sure, right? US 30 for sure. 500 in there, man, minimum for a 0.01. You on mute, Doc?
Let me say something real quick, because people telling you you can get in under 100. Yes, you can get in under $100. We're not telling you you can't. We're providing you with our recommendation.
Yeah, I'm trying to save you from
buy
yourself.
a $1,000 watch if you have $1,100, but we wouldn't recommend that.
Right. So whoever said you can get in the trade, that's cool. You made money off of it. I guarantee you lost more that you won't talk about. Off that little account, you ain't got enough breathing room for how much NAS and SPX and all that stuff pay out. So that's going to the trick I was telling y'all. The broker allow you to enter them trades to lure you into seeing profit, so you'll be able to tell more people to do it. Right? The more people you got buying, me and Doc looking at y'all like, look at these guys. Where y'all placing y'all stop losses? Oh, I don't trade with those. Okay, bet. So not only are you, I know you're not confident because you only putting $50 in your trading account. That's flaw number one. Right? When you get to that level where and I'm not saying I'm better than anybody on the call. Like I just play games within the game. Like the best I've ever done in 1 week, I've turned $50 into 12 grand in 1 week. But guys, I was compounding and scalping with what I'm showing y'all right now. The newest person that come into your business, man, they don't have the mental capacity to even understand how to do that. So check this out. This is what I see. Price creates a lower high. Look at the structure. Everything is going right back to structure on what I'm telling you. Creates a lower high here, right? These are my lows. These are my lows. Price creates an equal low. Okay. My first target is going to be here, but I'm looking for a whole number. So look at the time. At whatever time, look at what happens. Look at the time at the bottom. It's military time. Doc, help me out. What's 1555?
Is 3:55.
3:55. And then 4 o'clock. Right? 5 minutes before 4 o'clock. This burst happens. Keynote for NAS, SPX, or any indices. If you enter any trade before 4:15, know that the market is going to pause at 4:15. Just know that.
And take your money.
It's going to pause. And you're going to be like, why ain't it letting me close my trades out? Why ain't the market moving? Well, the market closes at 5. So what they're doing is they're pausing the market to be able to accumulate orders, get all the data and stuff out the way for the new day to get established. So don't enter trades at 4 o'clock. You should be closing them out by 4 o'clock, personally, unless you've already in profit. Then just move your stop loss in, take the little swap fee or whatever. Them swap fees don't mean nothing. Pay attention. Price creates a high right here. So just because you see a double bottom, I told you to be patient. Are you patient enough to wait? Right? Because you enter this trade because you first saw a double bottom at, you said 3 o'clock, right? 3:30. You enter this trade at 3:30. Would an extra 30 minutes hurt you? No, it wouldn't. Price created a lower high right here. I would have been closing out my trade. Why? Because if I enter here, I know that this created a lower high. Price could have potentially just dropped down. I don't want to chance that. I'm going to close that out. Cool. As we get closer to a new hour opening, I'm like, oh, price is closing above 1100. Bet. I'm buying that next hour. Do you hear me? I'm buying that next hour because price already failed to create a lower low. Man, oh man. All I'm doing is basing it off of structure. Failed highs and failed lows. Failed highs mean I'm selling. Failed lows mean I'm buying. So as price made that shift up, it came back up to what? What your first target could have been? 1100. So guess what I'm waiting on, guys? We see price broke structure right here. Guess what might happen? Price might end up gapping down to give us a what, Doc?
Hold on, I was responding to a question. What did you say?
We might get a break in what?
Retest.
All right, cool. So we know that in these zones right here, in this zone, price is potentially getting ready to retest around this 1100, probably 1120. So if price closes above 1120, right? If price closes above 1120, 1125, look to buy it around this area, guys.
Yep.
Look to buy it around that area for price to continue back up to here. Because what we have here, guys, is some more liquidity. Price broke below this zone and didn't retest none of this. I hope y'all hearing me. I hope y'all really seeing what I'm telling you, man. Right? Your goal is not to know when all the time, it's to know where. If you know where you want to buy, then you start correlating it with price. So I'm looking to buy around here. Doc, do you put anything on your you do stuff like this? You put,
I
buy.
have templates, I have buy zones, and I say zones because as you mentioned earlier, every broker has different prices. Don't get used to the numbers you see on TradingView. Look at the zones, the areas.
Price closes above 111.020. Right? Buy price there. Then you got one take profit and two, right? Take profit one would be where the previous high was at. Right? So TP1 would be, and if you really want to keep it cool, take profit one can be a little bit under that. So 110, you can do 80 if you want.
Yeah, that's what I was gonna say. If it's at 100, I'll put mine right around 90.
Right? Anywhere from the 80 to 90 range. So let's change that. We got our whole number. We'll do this 110, 80. Boom. That's our first take profit. What that means, guys, is if I do this, I know that 80 minus 20 is 60. That's 60 in the bag that you know is most likely going to happen for you. So when you know that and you see that, Melo didn't say lot up. I ain't say lot up. But I am saying get your bag. I am saying that. Go get it. You know what I'm saying? Like, go get it. Look at the confluence. Break and retest. We got that. Okay, cool. I know we getting ready to hop on big brother David Monetier's call, but notice how price action is damn near the same on here, right? Peep action. What do I see on the daily? Here, let's move this off. On SPX. almost similar, like damn near similar price action. What do I see? Right? I see some lows here. I see structure, boom. I see some lows. Price is not rejecting this, 3,200 range. It keep rejecting it. It's not going underneath it. So what am I asking myself? Okay, price came up here, traded right into the liquidity of the sellers. Boom. Price came here. This is the last bullish candle before price shifted down. Price came right into that and started melting. I do this stuff. So this is how I really mark up charts. What I just did with y'all on this pair specifically is what I start doing. I look at the low of where it's at and I say, okay, cool. Price closed. The bodies of the candles closed in here. Look how price wicked that and came back up. So now I'm saying, okay, there's some imbalance in here because there was price created a lower high, low, price traded into that. That's a retest somewhere. Then shifted down again. So in between, what happened in between this area right here and where price is at now? There's some imbalance. So I know that in this area right here, there's going to be a last bullish candle in this area. Let's go down to a lower time frame. Cool. We on a 1 hour time frame. Each one of these candles will work for an hour long. Check this out. So I'm looking at this like this. I know that price respects. Yeah, if y'all was on my last call, I told you that price respects whole numbers, which are zeros, right? 20s, 50s, 80s, and then it repeats itself. Oh man. Cool. Price respects these ranges. So when I'm buying and I'm selling, guys, I'm looking at in between here. I know that this line was here because of the bodies of the wicks, but pay attention. The nearest whole number that's right under this is 3,200. Right? 3,200. Right above that, we got 3,220. Man, I hope y'all taking a note of this joint. Ooh, wee. I'm really unlocking the code for y'all. So even if we wanted to do this right here, again, let's go back to it. Structure. Structure, man. Structure, structure, structure. It's never going to lie to you. But the pace, you got to factor in patience and discipline. Price creates a lower high. Lower low. Lower high. Not a low. Lower high. Still downtrend. Cool. Look at the time. Again. 6 o'clock in the morning. 6 o'clock in the morning. So I know that here, I know that in this area, I want price to get back in here. This is the lowest low. Price comes in here, shifts up. Okay, cool. That happened at 3,220. Right? Right above that is 3,250. Okay. So when I know that these lines is on here, I know that if I'm working with 3,200 and I'm working with 33 as my 100 pip range, right? 33, y'all see that on here, right? Hope y'all do. $3,300, right? If I know 3,200 and 3,300 is 100 points, all I'm doing is trading the 20s, 50s, and 80s in between those whole numbers, y'all. I promise you. And it's so much more profitable because I make rules. If price is trading above it, then I'm aiming for the next 50 or the whole number. right? Or the 80. If price trades below that, and I'm aiming at the 20. It's only 2 or 3 numbers that you about to aim for every single time. If it's above the 50, I'm aiming at 80 or the next whole number. If it's below the 50, I'm aiming at 20 or the nearest whole number. Keep it that simple. If price fails to break below it, pay attention to structure now. Price creates a low. This is going to end up being a harmonic pattern that y'all don't see yet. We ain't about to get into all that, right? But if price creates a high right here, watch this. We'll bring a fib out. Price creates a high right here, creates equal lows. Price retraced at the 61.8. If y'all familiar with harmonics, or if y'all not, y'all need to go watch Ray Robinson or somebody in the harmonic section, or Manny Quinones. That's who I learned it from. I just took time out to learn something that y'all didn't want to. Y'all want to act like y'all learning, but y'all don't really want to learn it. Do you care about looking cool, or do you want to be profitable? I care about being profitable. I'm gonna look cool all the time, right? I'm gonna look cool all the damn time. Look, 61.8. Well, I just rounded it to 62. Isn't it ironic how the 62 is lined up with the 3,300? My gosh. If price comes here, guys, this is a harmonic pattern for you. This is going also into my bias. I know that price is getting ready to break above this high, no question. It's going to end up trading into this zone. Well, guys, in a 61.8 patterns are Gartley patterns, right? So what we'll do is this. And I'm letting y'all go here in like 3 minutes. So just to be a quick hitter, Gartley pattern Forex. Okay, cool. Okay, cool. A Gartley pattern can trade into a 38.2 to an 88.6. Or excuse me. Let's see. 61.8. What do you guys see? A bearish Gartley. Price came here, a high, created a low. As long as price don't break below the A zone when you get it, and they ain't created a scanner for indices, so you just got to know how to do this stuff yourself. That's the power of the education, right? But if you see this on a scanner and you see a 61.8 retracement, or I just rounded it to 62, guys, if price fails to break below the previous low that it made, it's going to more likely retrace to the 78.6 or 88.6. But if we just talking about structure, price created a low, lower high, failed to create a lower low. Now it's about to break structure. You can anticipate that happening right here. And this is when everybody has their aha moment. This is my kill zone right in here. This is my kill zone where I expect price to get to. So guess what? If I know I'm trading above, if I know I'm trading above 3,300, and I told y'all that price is going to go to a 20, 50, or 80, guess what I'm trading to? If this is my kill zone, I'm looking for what in between this. Isn't it ironic how these things is in here? What y'all seeing here? 33.20, don't you? Right? 33.20. What else do you see here? The last bullish candle before price moved down. Oh my goodness. Is this stuff making sense? Is y'all getting some sauce right now, bro?
I hope so.
Is this the only thing? Is it only clicking to me? I'm sorry, y'all. Is it only clicking to me? Right? So if I'm trading this and I'm looking to buy it, guys, I'm looking to buy it to the 33.20. So I immediately start looking at, okay, if I'm looking to buy it, I'm not going to buy this unless price closes above an 80, because I'm working with 32.20, 32.50, 32.80, 33. So if longest price does not close below 32, I mean, the deeper it go, if I can get a buy entry at the 50, I'm cool with that. But I know that price is getting ready to create what you guys see as a harmonic pattern. Right? It's getting ready to draw it for you here. X, A, B, C. Your D point gonna be here. So right now, since price failed to break below this low, you can buy it to the D point, and then you could look to sell retracement. But all that is just a break and retest, guys. I mean, stuff all makes sense. Break, retest. If price closes above 3,300, then you look to continue the trend. If it breaks below it, then wait for it to retrace below, stay below 3,300, and then sell this thing down. That's how I trade, y'all. I hope y'all got some sauce, man. Them the only two pairs I'm about to mark up for y'all.
Appreciate it, bro. Look, we're running out of time. Everybody needs to be on Mr. Emonitier's call, but I'll make sure we get these setups. I'll drop some. You got to be active to get them, though. Too many people want to say they want to hit a certain level in trading in the business and won't even pay your membership. It doesn't work like that. You can't refute certain principles when it comes to success. So Melo, man, we appreciate you, bro.
Appreciate you for having me, bro.
We'll drop these in the chat. See y'all on Mr. Emonitier's call. Peace.